Hey everyone, welcome back to Corporate Decoder. Today we're diving into a 10K filing, and let me tell you, this one has more twists than a pretzel because it involves a bank merger, which is like two puzzle pieces that might just make sense. We're looking at ChoiceOne Financial Services, a smaller bank holding company in Michigan. Now, if you haven't heard of them, don't worry, that's kind of the point. We will examine their annual report. This Form 10K is for the fiscal year ended December 31, 2024. Think of it as their yearly report card to investors, outlining how they performed and what they see coming down the road. Now, ChoiceOne isn't just sitting still. It has a history of acquiring smaller banks in Michigan, consolidating them in order to grow its operations. In March, they completed a merger with Ventura Financial. The bank thinks it's going to create a lot more revenue and other financial benefits. So, what does this merger actually mean for ChoiceOne? ChoiceOne is focused primarily on banking. This single industry focus means they're putting all their eggs in one basket, a strategy that could be either a masterstroke or a major vulnerability, depending on how the banking sector behaves. ChoiceOne operates 29 full-service offices and 5 loan production offices. All of their markets are in Michigan, mostly in the western and southeastern parts of the state. That means they live and die based on Michigan's economy. If Michigan's doing well, ChoiceOne probably is too. If Michigan's economy hits a bump, ChoiceOne feels it. The banking industry is a competitive one. ChoiceOne isn't just fighting other banks, such as larger commercial banks in their primary market areas. They're also up against credit unions, insurance companies, and even tech companies who are competing for people's deposits and loan business. Some of these competitors are substantially greater than the bank. Banks and bank holding companies are heavily regulated. It's like having a bunch of referees watching every move they make. One of the rules is risk-based capital guidelines. If the company or the bank fails to meet these capital guidelines, that is a problem for them. There is the Community Reinvestment Act, and under the terms of the CRA, the appropriate federal bank regulatory agency is required to examine the bank, to assess the bank's record in meeting the credit needs of the community served by that bank, which includes low and moderate income neighborhoods. Currently, the rating of the bank is satisfactory. As of February 28, 2025, the company, on a consolidated basis, employed 392 employees, of which 336 were full-time employees. The business continues to be maintained and operate and function. Here are some key numbers from ChoiceOne's financial report. First, let's look at their investments. At the end of 2024, they had about $479 million in securities available for sale. These are things like government bonds, municipal bonds, and mortgage-backed securities, with a weighted average yield around 2.5%. It's worth noting that ChoiceOne holds swaps to offset the risks on interest rates and volatility, with a notional value of $201.0 million. ChoiceOne's loan portfolio was $1.55 billion. Now, about 60% of their loans are in commercial real estate, with another 18% in residential real estate. This means they are highly exposed to the value of commercial properties and residential houses, as well as potential fluctuation on interest rates. ChoiceOne sets aside money to cover potential loan losses, which is an allowance for credit losses. This represents a portion of the loans that can be lost. If the borrower does not pay, this amount is calculated and charged. At the end of 2024, that allowance was about 1.07% of total loans, which is normal compared to the 1.11% of December 31, 2023. Now to deposits. The deposits are the money in checking and savings accounts that people put in the bank. At the end of 2024, ChoiceOne had $2.2 billion in total deposits, with approximately 38% of these deposits uninsured, which are above the 250,000 FDIC limit, implying that depositors could lose some of it if things get really bad for the bank. Scroll average equity. Here are some selected financial ratios to wrap things up. The return on assets was 1% for 2024 compared to 0.85% for 2023. The return on equity was 11.8% for 2024 compared to 12% the prior year. What does this mean? That 2024 is slightly better. It seems that ChoiceOne is performing quite well. All reports must contain risk factors in the company's activities and operations to explain uncertainties of operations. The risks and associated impacts were the standard ones found on these reports. One highlight, though: Cybersecurity, banks are like giant treasure chests for hackers, and ChoiceOne admits they face various cybersecurity threats. They're taking steps to prevent breaches like employee training and monitoring systems, but a successful attack could really hurt their reputation and financial results. It's important to note that they are not aware of any material breach in cybersecurity. This is worth highlighting. The Michigan economy itself is another risk. ChoiceOne's fate is closely tied to the economic conditions in that state. Recessions, job losses, or changes in the financial markets there could all negatively impact their business. Another notable risk for the company is that under the BHC Act, an entity or group holding 25% or more of the company's outstanding securities might become subject to regulation as a bank holding company. The top person is the Chief Information Officer, CIO, who has extensive experience to prevent cybersecurity risks. The cybersecurity team has several other members with expertise in network security, technology, and administration. The team meets regularly to review and assess the company's cybersecurity posture, identify potential threats, and implement appropriate measures to mitigate risks. The company has a common stock repurchase plan. However, no shares were repurchased during 2024. As of December 31, 2024, there were 375,388 shares remaining that may yet be repurchased under the plan. It's like having a coupon that you're not using. Let's look at the performance metrics. In the 12 months ended December 31, 2024, core loan growth led to an increase in interest income from loans of $21.2 million. But the cost of deposits also went up, eating into some of those profits. Now, what to make of all this? ChoiceOne is a smaller bank trying to grow by acquiring other banks and continuing its operations. The recent merger with Ventura and the public offering show they're in an aggressive growth mode. Their single industry focus could be risky, but management seems aware of the challenges and is working to address them. Their loan portfolio is strong, but also heavily tied to the Michigan economy and real estate market. If these things go south, ChoiceOne will feel the pain. Liquidity continues to be strong. ChoiceOne seems to be on a steady course of slow growth and profitability. However, there are some risks to the company, mainly due to the reliance on one single state. Michigan, while this risk factor exists, so does their satisfactory community rating, which implies the company performs its duty. Thanks for watching. If you enjoyed, please subscribe, like, and comment.